Good morning, everybody. Everybody had a wonderful holiday weekend. It was nice to have that extra day. All right, so interesting. I guess not so interesting, but there's pretty much what a huge, um, between multiple time frames disconnect here, and I think that's going to make it a little difficult here early on. I was a little surprised, somewhat, that this didn't follow through that big reversal from Friday. Anyway, that gap up that occurred and prices were rallying quite nicely and they just fell apart. And supposedly on this news about Russia and cutting off this natural gas. Anyway, so we got this big reversal bar. There was on Friday, a week ago Friday, there was that reversal. And then, week before last, it just followed through. So now we've got this weekly kind of in a not such a great buy setup because it took out the prior high. So the strength of that move up suggests buy the pullback. Okay. Now the pullback is at minor support on the weekly time frame, but at major support on the daily time frame. When you have a rally of this depth and clearing the prior highs it did here, most of the time it's not going to pull back this far on the daily time frame. And you see how it stopped right there at the that area of support, that shelf there, and it started turning up. And then there was the Powell comment, this is going to bring pain. The transition from, it's transitory to, hey, this is going to be painful. The admission there drove the markets down, and it was a fluid movement to the downside. So you got a power move down and then a gap reversal, ignoring the news. That's a bearish arrangement, but it's sitting on this support. And as you can see, which the spiders are trading here pre-market, well below the lower 50% of the wide range bar. So trading in the lower half. So nothing of significance on the gap up to negate this bar. And our factory work says, hey, if it can close more than 50%, we begin to discount the implications and message of this gap reversal bar. So that's yet to be seen. You see the hourly time frame having a fluid movement down. Again, I've got the support marked off with the blue dashed line. And then it rallies, a deep retracement, and then there was that pullback. And as it comes down to support, we look to the left, there's going to be buyers there, and it's stabilized. So I think we're going to kind of see what unfolds here this morning, is which way things are going to go, and whether it can retrace. Even if it retraces 50% into the green bar, it's got to close up there, because it can retrace up there. Plenty of times we see bars like this that retrace and then form topping tail bars as sellers come in, as it moves up into that area. And so we've got this little void, on the move down that occurred late Friday. So there could be the retracement. It's at support, intraday support. It's on this support here on the daily time frame. It's on minor support on the weekly time frame, where it's got to form a reversal. We'll see if that happens. So we're out of sync here. Well, we're not out of sync. We're never out of sync. The markets are out of sync as it relates to multiple time frames. And we'll see what unfolds. All right. So we have a clear signal based on just this reversal on Friday. However, the depth of this retracement, and this as a continuation pattern, it's not the greatest. Whereas this one was more of a no-brainer since it just started the turn. But this is a continuation pattern, and it's got to break these lows to start the move down, and then it gives us a clear line in the sand as to a stop loss above this high. And unless it can, again, close more than 50%, we are still not questioning the ability of this to go down to the prior lows. So even though this is a buy setup, if we were ignoring the daily and the hourly and everything else, It's still got to form a reversal. It's got to take out a prior week's high, or it's got to get a green bar. And that green bar could be a dip down, say to 380. That forms a bottoming tail bar and comes right back up and takes out the high, which obviously is going to take another week. So nothing here that's like, okay, this is a great setup, alignment of multiple time frames and avoid, and so on and so forth. We'll see how it plays out. Futures, we always look at, they're down here about 10%, on that support. And as I look at this, of course, this topping tail bar is a continuation pattern. Now, if it holds here today, it's okay, you got 3 days holding here. In the end, it's still got to retrace into that bar. That's the bottom line. And then from that point, do we have a counter trend trade against here where maybe it goes up to the 20? So same conclusion. So as we look at different time frames, different instruments, sometimes it's helpful as to bringing clarity to what we are viewing as a opportunity. Right? Good morning, McGraw. Yeah, it's looking out, I'm somewhat surprised as to the premium up above in SPX after that reversal, which is suggestive that institutions are still thinking, hey, this thing's going to go up, versus other times where we had patterns like this, it would have been premium down here, and there isn't. So the implication is that they're still thinking buy, and Friday didn't so much scare them away to flip to the other side. Little rejection here, some topping tail at this pivot high, normal. Essentially, the futures are going to have to get down below here to possibly get down here. So nothing great. And in reality, if it goes sideways here and can take out this high, there's more of an opportunity for it to actually go up. And we'll see if that unfolds. So SPX and option credit spreads, everything's going to be the same there. And just based on Friday, I'm thinking, well, it ain't going back up to that high. And there's, kind of evaporated from what it was. It was a little bit more before, but 4,010, I think would be safe. 4,005 is a little bit more premium. It's above 4,000, so take your choice. But, just typically looking at this kind of a bar, and all we're looking at is today, 0 days to expiration. What is the probability of negating this bar? Relatively low. What's on the side of that bar? The fact that this has fallen as far as it has toward this major support point. Still yet to be seen, some kind of strength that would suggest that, and we don't have that as of yet. Down below, it wasn't enough premium that I felt confident in it. It was a little too close for comfort. 38.55. I mean, that's within striking distance if it breaks that low. And so far, as we've seen in the futures in SPY, it's holding that low. So it becomes more of a personal choice. You want to, bet against the upside or bet against the downside. And sometimes if we get the proper setup, you can bet against both, but I don't see that today, even though, of course, it's a possibility that, everybody comes back from the holiday and let's see what unfolds. Was Friday just an anomaly? McGraw's betting 3,900 will hold. Okay. Hey, we all make our bets, and I can see that, just as I said, based on the depth of retracement. There is a relatively high open interest there. But can it get back up to 4,000? Well, I don't think so. Can it break here? I think it could easily break there because of the proximity to it, and it could just pop right back up again. So it isn't the clearest to set up. So, and as I look around other places, I don't see clarity anywhere else. Yeah. Qs, NASDAQ futures, down in the lower third of that reversal bar at support. You can see they're starting to come in a little bit here, but look, pivot highs, pivot lows so close together that no void, so it doesn't have such a great opportunity. Rob's telling me he's got 3,900 too. Right, for Greg, risk is to the downside more. Well, based on Friday's bar alone, Rob, yes. But as I've explained, the depth of retracement, no matter where we look, doesn't make it a no-brainer. Going from this high, coming all the way down here to support, it's not a no-brainer, but it is a continuation pattern. And there's lots of continuation patterns. One of the things I wrote in the weekend letter and in the video was like, look, I see so many continuation patterns here. I'm skeptical of them potentially following through, because it's like, hey, if it's so much of a no-brainer that everyone else can see it, it's probably not a no-brainer. But, it's what we have for the moment. And it's either stand aside and wait for more information or trade what is with a stop and, where it needs to be. Deepak's telling me, looking at the three most recent highs on the shorter time frames, it seems that it's having a hard time making higher highs. Yes, some support. Yeah, absolutely. It's what I've been saying too, DB Puck. It hasn't been able to move up. Clearly, you can see the NASDAQ futures. You're talking about SPY, which I could, of course, go back to. But nothing is having an easy time going up. And why would they, after a wide range monster bar, igniting bar to the downside? Right? Who the hell's going to want to buy after that bar until it gets down here to this support level? Well, I've got it marked off. And that's what happened. Last Thursday had the reversal at the obvious place. It was going up Friday. The news comes out and it collapses back down. Continuation pattern. It's got a void below. Now we're all going to see which way does it go. Does it another day? Does it retrace back up into the red bars like everybody overreacted on Friday? So we'll see. Here's the cues. You can see the same story there, and they're coming back in right now. And, as we look around, there's no clarity anywhere else. Right? Here's the Dow, deep retracement. This one broke support, that level here. So relative weakness. And it broke its support point from the same point in time. And just if we were just trading this particular instrument alone, I'd be saying, well, who the hell would I want to buy this until it gets down here where it should be a no-brainer? Where these bottoming tail bars are, this area, or 30,000, somewhere in here. But it's got to break a prior bar's low, which it hasn't done yet. Same story here, deep retracement. It's got a void above, it's on support, it's got a void below. Which way is it going to go? Continuation patterns like this aren't a no-brainer. Now, Bitcoin just kind of like dead, sitting there, on that support, an inability to come back off of these lows here. They couldn't do it here. They're not doing it here. And I think it's going to hit the fan if it closes down below this 19,000 level. So there's no guidance here other than there doesn't seem to be much interest in buying Bitcoin other than to, give it a shot at support and then see if it lifts off. And just like here, if it can't lift off, well, people take their stops and hit the bid, drive it down to the next level, stops at that level. The thing is, once it breaks this level, and I'm look at this and I'm like, I get no clarity here either, because on this weekly time frame, this is a bit climactic. This could become a W bottom, but still, it's going to have to get above these highs here. And so far, it can't do it. It breaks below here. There's nothing to stop it before it comes down here. You could draw the fib lines, trend lines. I mean, I get a kick out of it when people start drawing lines under lows like this, and rather than from up at the top, they start drawing them like that, looking for some kind of support. And it's pretty ridiculous. But I looked at it that way too, 30 years ago, because you see what other people are doing, and it's like, oh, that must be how it's done. It's really kind of dumb. Anyway, silver bouncing a little bit here. The dollar retracing a little bit. You just don't see silver and gold having much of a chance other than technical bounces off of support and resistance, unless the dollar starts giving it up. And why should it? Why should it give it up as long as we've got, the 3-month on a massive bull market uptrend? And you want to keep an eye on that. Or, everybody's talking about the 10-year. And here you got a little bounce up, negating this reversal bar, right? So, that's bearish. The markets are holding up relatively well compared to the 10-year, pretty much negating this red bar, which suggested it could pull back into this unfilled gap, but that isn't happening. And a couple of weeks ago, we said, hey, this breakdown failure, you can see here, this breakdown and failure, the markets aren't going to like it. And obviously they didn't. And now, from there, we said, well, 3%, that's going to be a significant level, and up it went. And now getting above 330 just set an alert. If that's going up, I think those options down below 3,900 start becoming a lot more expensive. And, you're going to bet on the downside not following through. This is something you're going to want to keep an eye on. And, crude oil just stable here, holding the technical levels, right? Things are trading off of the technicals here, and there's a lot of uncertainty in the markets, which obviously can make it difficult. Well, it's difficult because we want something to set up the way we want it, and there's no significant reversals at these support levels. So it's either, intraday trading, credit spreads, stand aside. Well, look at these internals. They're at levels where they're supportive of a market holding and potentially turning. Now, one of the things to realize that in a bear market, this can go quite a bit lower. This won't go much lower. It can go a little below 300, but it can just hang down here, down at this level while the markets are not bouncing. This in extreme would be 1.4. I haven't seen that in many years. Why would the dollar be strong if there's so much inflation? Because currencies are tied to interest rates, Logan. So as short-term interest rates are rising, they're supportive to that currency. And it's the same everywhere. That's your technical fundamental part of if you're going to trade currencies. Right? As Dan is saying, Europe's in the tank. And the dollar's going up, which makes US companies' products more expensive. And part of my thinking, on Friday was like why the markets reacted to such a violent reaction to this energy thing between Russia and Europe. Well, not only is there this inflation, the currency implications, against U.S. products, buying U.S. products. And now, people there are saying, do I spend my money on, say, coal, right? To stay warm versus if they have the ability to, maybe they're going to buy, coal burning stoves from some company in Europe versus buying some product from the US that maybe is attractive to them. So, it's basically, do I buy a discretionary thing or do I buy a consumer staple? And as we look at even consumer staples here in the US, they got clobbered on Friday. So essentially there was no place to hide. As far as currencies, this isn't doing much of anything here. The euro's going down, dollar's going up. But the yen is getting decimated. You just look at this trend. So, September, supposedly worst month of the year, well, historically, I guess, and then October. So, and proven otherwise, I think we have to respect the seasonality. If things break last week's low, I think they can go down to the June, July lows. So we'll see how it unfolds. All yours, man.
Good morning, everyone. So, yeah, I'm actually favorable of today's pre-market gap up, because when we get a big gap up or down, it makes it harder to get on board new trades. And secondly, with all these continuation patterns lower all over the place, which the trigger would be Friday's low, then it's negating today's gap up. So that's another failed attempt to move higher. Let me put my screen up here. So, yeah, I mean, there was a number of failed attempts that these morning gaps got negated. And, I obviously agree with everything Greg said in terms of continuation patterns. But if we negate today's bar, how we close, market internals, if we were to take out Friday's high, then I'm fully bullish again for a bounce. We have a couple put spreads and naked puts, a couple longs, a couple shorts open. I have a huge watch list here. Let's go through them. Zoom is one short sample. Hey, Thane, I'm still in Nashville, Thane, so I'm traveling, heading back this afternoon. I avoided the airport yesterday. So, yeah, I hope it's okay. So all our opens are fine. Let's just plow through. I got a monster list here to look at. So KU has earnings after the bell, and this one's down a lot near support. So this one's I'm definitely interested in selling puts, and so I'm gonna just leave it there so I don't forget. SE. This was a type of pattern. You had a climactic buy setup that could have formed a double bottom with a new low plus, but look at weekly, monthly are nasty cracks, gapping down here today, relative weakness. Something's wrong with this stock. So that's a day trade short. We just got to watch and see what's going to go on. But, I would start to say something like that, 10, 15-minute low if it can't bounce short the pre-market low. CCJ, yeah, McGraw, you gave me a couple. Yeah, Thomas McGraw, I had that on a list. CCJ. But yeah, it looks great. It's out here at a prior high, but very bullish. I love bullish consolidations in the top half of WRB. So we actually had 2 sets of them. Sounds better. All right, well then I'll just stay here in Nashville for a couple months. My first time here, by the way. It's the most amazing. If you all like live bands, it's wow. It's like the Super Bowl of live bands on every bar. So you had 2 beautiful continuations here. So yeah, CCJ looks great. HYRE. Why am I looking at this? Oh, because of the gap up. I just saw this one going by the ticker. And, for those of you who don't know me, my screen layout, I have daily bottom left, 15-minute upper left. And I have a little snippet of a weekly and monthly here that I can make big when needed, like now. So when I saw a big gap up like that, I'm like, oh, let's see how big the price void is. So if this thing's down from $24 and something's up today because it's gapping way the heck up here at the prior high, so it's definitely not the point to get on board, but it's making it to my interest list to get on board. DWAC Trump. There was some news that shareholders didn't vote to extend some financing or something or other about the merger, so that's getting whacked. And somebody in the green room mentioned it back here as a short, and wow, that was a home run. All right, so DWAC, no interest in you. AMD is being added to the S&P 100. That's a put spread watch and maybe 15-minute high day trade. When we trade climactic buy setups, we're looking for potent reversals, at least on one smaller time frame, and we don't have that yet here, unless it took out Friday's high. But it could be the start of it. So that's going to go on my list. DD got kicked out, and nothing's happening to it. Target I posted as a long watch, had favorable Barron's mention. This is what we call the turn, bullish turn at the 50 here. Little buy setup on the weekly. So that's a long watch. I checked the puts already and there's no juice. AMC, you know, these movie theaters had that special $3 movies. Opening pretty flat, but that's another bottom fisher there, AMC. You know, talking about these meme stocks, this BBBY, the CFO. You know, whenever I hear suicides, my first reaction is, you know, when they say jumped out of a building. Well, did he jump or was he pushed? Same thing happened in China or Russia. I forget what it was. Yeah, Russia. Some top person, they said he fell out of a building. Yeah, Russia. Then really, how many people fall off a building? Not saying it's not possible, but you gotta question the word pushed. All right, so yeah, BBBY. I'm just I'm not. This is like trading news, and so this is a bad piece of news. Meaning, I mean, aside for the guy's death, of course, but the CFO is in charge of the finances, and he did this right after he made the release. They're trying to get their lifeline and all, so it just raises the question: what other financial skeletons are bombs are being hidden there? So let's stay away from BBBY right now. ASO buy setup on the weekly. So this one is on my list. If it takes out Friday's high, then I got my turn at the 50. NXST, it's just, you know, bullish consolidation. You buy setup weekly, and notice how these are a lot stronger than the broader markets. There's a CCJ, yeah, one of you mentioned. Futu, bullish consolidation here. And look at my little weekly. So I open it up. See that? I got a 1, 2, 3 buy setup, minor support with a price void. So Futu, it's a sloppy, but there's no pattern on the daily. So I'm going to watch it day by day. I guarantee you, as long as it holds last week's low, I guarantee you we will find a setup. Maybe it's a gap reversal, maybe it's another continuation, but I don't know, but it's on my list. It's actually gapping down here, which is good. Let it bobble around a couple more days to give us a better setup. So that looks great. Man looks short. That's a continuation pattern lower. Shack looks lower. Call spread. LVS lower. Look at this, sideways for 2 months, and now it's closing breakdown below the 50. But so these gap ups I actually love, because then they're not gonna trigger. And Greg, I was waiting for an email from you saying, why are you giving all these longs or put spreads? And the answer is because if the patterns trigger, they look fantastic. VT, why am I
Put
looking?
spreads are different than longs. You just think they're not going lower. That's all. If they're far enough away.
Yeah, well, I have a couple longs in here. Let's take a look at them. For example, Uber. Look at Uber over Friday's high.
Yeah, I like it.
Right, I got a buy set up on the weekly. See, so it meets that test, price void, sideways, and the element of a little red bar ignored. It's only gonna trigger if the thing wants to go higher.
Yeah.
So
There's
that,
been a lot of buy recommendations on this lately that I've seen,
yeah,
so which
that
is
helps.
interesting.
Yeah.
Dan, I use this expression, "victim of the markets," and like if the markets should tank, it'd be terrible if that triggered as a long because it'll probably fail. You don't
Right,
know.
right. Correct. And so well, so two comments to that. Number one, that's why I set alerts early. So, well, there's many reasons for that. But then I can hit the eject button and say hold off for number two. We hope that it doesn't trigger if the markets are going to stay weak. But yeah, we get in trouble if it triggers by 10 cents and then, gives it up with the market. All right, so PPG looks great under yesterday's low. LNG. So here was one, Greg, I gave put spread. Look at LNG, looks fantastic. But we're not going to get filled because the gap's too big. I also noticed BTU. I'm assuming they're the same sector. Peabody, natural gas. I would have put this in the letter.
That's a coal stock.
Oh, whatever it is. This is a buy setup. Beautiful 3-bar turn. Range expansion bottoming tail at the 50, closing above Thursday's high with a price void. That would have been a not expecting a new high. Target 27.50, but the gap would have mooted it anyway. I'm just showing you the pattern I like. Yep, CCJ looks great. Yep, it looks fantastic. I just personally